Imagine you're watching the news, and suddenly, Sam Altman, the guy who runs OpenAI, says something shocking. He tells reporters, "We're in a bubble." And just like that, the tech world panics. So what's a bubble? Think of it like this. You know how you can blow a bubble with gum? It gets bigger and bigger, until pop. That's what happens when something becomes way more valuable than it should be. When Altman spoke, some very rich people started getting worried. Peter Thiel sold his NVIDIA shares. Michael Burry, the guy who predicted the 2008 crash, bet that big AI companies would lose money. These guys know something. Here's the thing. There's a ton of money sitting around with nowhere profitable to go. A philosopher named Karl Marx figured this out a long time ago. He said,
When you have too much money and not enough good ways to invest it, bad things happen.
now, AI isn't going away. It's real. It's useful. Just like the internet survived the dot-com crash in 2000. But the crazy prices, the massive investments, those might not survive. For years, borrowing money was super cheap. Companies borrowed tons of it. But instead of building new things or hiring people, they poured it into just 7 tech companies. These are called the Magnificent Seven. Here's the weird part. Without these 7 companies, the entire stock market would be losing money. That's not healthy. That's not normal. It means all the money is concentrated in one tiny spot. Meanwhile, what about everyone else? Less money reaches the real economy, the places that make actual things employ actual people. So even though the stock market looks great, regular people struggle to afford groceries. A geographer named David Harvey explained this using Marx's ideas. He called it the spatio-temporal fix. Big words, simple idea. When capital, that's just another word for money, can't find good investments, it does 2 things. 1, it bets on the future. 2, it expands into new territories. The AI boom is a bet on the future. Investors are buying shares based on profits that might never actually happen. Marx called this fictitious capital, money that exists on paper but not in reality. It's wealth that looks real on your balance sheet, but there's nothing solid backing it up. AI also needs physical stuff, data centers, chip factories, and rare minerals. These projects absorb tons of money. They require new territories, new workers, and new resources. But even Altman admits, we're running out of places to expand. So what happens when this bubble pops? Marx explained it clearly. When companies can't make money anymore, they don't just disappear. They survive by destroying other things. What things? Jobs, pensions, people's savings. We've seen this movie before. In 2000, the dot-com bubble burst. Small investors lost everything. Big companies got bigger. In 2008, the housing market crashed. Millions lost their homes. Banks got bailed out. The really big investors, the ones managing trillions, already see this coming. Vanguard, one of the biggest, has moved a lot of money away from stocks and into safer bonds. They're preparing for the storm. Here's something that's never happened before. Right now, companies are spending money on AI computers and data centers and contribute more to economic growth than you and me buying stuff. Think about that. The economy is growing not because people are buying things, but because companies are gambling on AI. That's backwards and fragile. In the past, when things got tight, companies could move their money to other countries. But now, tariffs, trade wars, export controls, the exits are being blocked. So the money has nowhere to go but into more speculation, more gambling. When things start looking shaky, the Federal Reserve, the people who control interest rates, usually steps in. Their solution? Make borrowing cheap again. Lower interest rates, let companies cover up their losses, and start new cycles of speculation. It's like giving a gambler more chips after they've lost. Here's what Marx saw. When the economy isn't growing from real production, the system pushes regular people to borrow more. Can't afford groceries? Take out a loan. Can't pay rent? Use a credit card. We're trading one crisis, stagnation, for another, debt. So here's the picture. The AI bubble is built on shaky ground. When it bursts, governments can't easily move money to other countries. The economy is already held up by fragile credit. When one card falls, here's the thing. When bubbles burst, the money doesn't vanish. It just changes hands. It concentrates on the wealthy, in bonds, in assets they can protect. The Federal Reserve will probably cut rates to prop things up, but that doesn't stop the crisis. It just moves the pain. Here's the crucial part. Bubbles aren't mistakes. They're how the system works. When you have too much money and nowhere profitable to put it, you create bubbles to absorb it over and over again. It's not a bug. It's a feature. The pattern always looks the same. Step 1. Asset prices inflate. Step 2. The bubble bursts. Step 3. The government steps in to save the wealthy. Step 4. Regular people pay the price through job losses, pension cuts, and higher costs. Step 5. Start over. The current trade policies, tariffs, restrictions, close off the escape routes. Capital can't easily move to new markets. So it gets more desperate, more leveraged, more risky. Each bubble has to be bigger than the last. Until, let me be clear, AI technology will survive this. Just like the internet survived 2000. The technology is real and useful, but the speculation around it, that's the bubble. And when it pops, AI companies will adapt. They'll be fine. But what about workers? When the dust settles, your pension fund probably took a hit. Your job may be gone if your company restructured. Your salary? Frozen while they weather the storm. The billionaires who created this mess? They'll be fine. They always are. This isn't really about AI at all. It's about an economic system that has too much money, chasing too few good investments. When you can't make money from creating real value, building things, helping people, solving problems, the system turns to gambling instead. So here's the question nobody in power wants to ask. What kind of economy needs to create bubbles to survive? What does it say about our system when the only way to keep growing is to bet on futures that might never arrive? And who decided that when those bets fail, working people should pay the bill? Remember this. When someone on TV says the economy is doing great, ask, great for who? When they say the market is up, ask, is it the same as regular people being up? Because it's not. The AI bubble will burst. Maybe this year, maybe next, maybe later. But one thing is certain. When it does, the people who created it will walk away fine. And the rest of us will be left to pick up the pieces. The question is, are we going to keep accepting that? Or are we going to demand something different? The AI bubble isn't about technology. It's about who profits and who pays.